Hi, everybody. Merrill Strachan back with you here with Real Estate Investment Secrets, sponsored by TN3B Financial, your go-to source for funding for your fix and flips, your long-term and short-term rental properties, rehabs and renovations, ground-up construction, and we got something new coming up real soon, so stay tuned. All right. Before we get into the meat and potatoes, I want to talk to you about interest rates. I want to talk to you about where is the market going right now. What are some projections there? We're going to take a look at a couple of things like that. Before we do that, as always, got to satisfy the attorney. So give me a second here. All right, so let's get to our little disclaimer here. I did this right. There we go. This information is intended for informational purposes only. The opinions stated by the author, me, are only opinions and are not intended for legal, financial, or accounting advice. When making decisions for yourself or for your business, please make sure to check with your own legal, financial, or accounting professionals. Okay, great. Now we got that out of the way. Let's talk. Let's have a conversation. Let's just chat here. All right. So people are always wanting, I'm on the phone all day long. The very first thing people ask me is, what are your rates and terms? And I have people ask me that before I even know what the deal is that they want to do. And so we always need to talk about the deal. But rates and terms, those are always important. So let's take a look. What are the current rates we have out there? There's the disclaimer. All right, what are our current rates? Here we go. Current rates, hot off the presses. Conventional loan is right now at 7.125. And if you remember from last week's video, our target, we want to see interest rates at 5.5% or lower. All right, a jumbo loan is at 7.25. Now, when do you get in a jumbo loan? When you get above that FHA cap rate for your market. Remember, those rates are based on for your market. This is a loan average here. All right, the VA loan, 6.49%. USDA loan, 6.625%. And the FHA loan, 5.995%. All right, remember, we're looking for 5.5 or lower. These rates are up slightly from a week before. The reason why they're up partly is because we had a better than expected jobs report that came out. So more people are getting jobs, more jobs were created, more people at work. When people are working, they've got extra money to spend. And so there were some fears of inflation, and inflation is negative, as far as the way they curb inflation is they raise interest rates. So you'll stop spending money. And so inflation is at 3%. It's expected to drop to 2.6% by the end of the month. But we're looking at a target. The experts seem to think that if interest rates get down, if inflation gets down to 2% or lower, then we're going to start to see these interest rates come down. Okay. Another interest rate, I don't have it on the screen, but I want to share with you, is the Fed rate, the federal funds rate. Currently, the federal funds rate is 5.25 to 5.5%. That's the federal funds rate. Where were we a little over 2 years ago? The federal funds rate was 0.09%. 0.09%. Okay. When we had those great interest rates, the federal funds rate was at 0.25%, 1/8%. Right now it's at 5.25% to 5.5%. So the Fed is going to start, that's the interest rate that once they start lowering that interest rate, because the federal funds rate is what all the banks are paying to borrow money for a day. So once the federal funds rate comes down, once the Federal Reserve lowers that, but they're waiting to see interest rates come down, the inflation to come down below 2%. There is some good news out there. Some hot news coming out of Ohio, in particular over in Columbus. They've got a lot of construction going on there. In Indiana, we're seeing a tremendous amount of new building permits being issued. So construction is building up there. We've seen a 1.1% job growth in Indiana, and Ohio was second with 1% job growth. So that's good for those areas. They're building, Google is putting in a data center in Fort Wayne, Indiana, from what I read. And so there's going to be a greater demand for housing in that market, greater demand in Indianapolis. Wells Fargo is building a whole new IT center in Columbus, Ohio. So that's really growing there as well. In the South, we're looking at North Carolina, South Carolina. They've got some great news coming out of them. And so as I talk every day, I'm talking this good news to people as I'm talking to borrowers, to investors like you. And one of the things people always ask me is, well, are we in the market? And so I spent a little time and I created this real estate investment clock. I took it from, there's like an investment clock for stocks and the like to determine where we are. So I wanted to share this real estate investment clock with you that I put together here for you. When we're at 12, top of the clock, you're a seller's market. As the market starts to come down, and when you're in that seller's market, we've got multiple offers on property. Houses are spending the shortest amount of days on the market. And then as we're coming down out of that seller's market and moving towards a buyer's market, you're really in a good place to be engaging in buying and holding properties. Okay. And then as we get down to the bottom of the market, when we're in that buyer's market, that's when sellers are giving a lot of concessions on properties they've got listed. Properties are spending the highest number of days on the market. And really, it's the buyer coming in. Are we in that buyer's market yet? I'm not really sure. I personally think we're beyond the 3 and we're approaching, we're coming into the 6 in certain areas of the country. In other areas of the country, like Columbus, Ohio, as I mentioned, Indianapolis and Fort Wayne, I think we're beyond the buyer's market. We're moving up towards that 9. And so really, and as we're moving, and once interest rates start dropping, we're going to be the buyers are going to be out there and we're going to be quickly moving up to that seller's market. And so one of the things that I suggested last time is, hey, you want to be getting your properties under contract. Okay. You want to be getting those fix and flip loans going. You want to get those properties under rehab and be ready, because if we do see that 5.5 interest rates come May, then we're going to be in a seller's market. People are going to start coming back into the market because now they feel they can afford the properties. All right. So that's all the information I got for you today. We're going to stop this share so I can go full screen with you again. That's all the information I got for you today. I want to wish you all a great Super Bowl weekend. Are you rooting for the Niners or the Swifties? Don't know which. Whichever team is yours, root for the team wearing red. I'm going to predict the team wearing red wins the Super Bowl. All right. That's all I got for you. Have a great, great Super Bowl weekend, and we'll talk to you soon. Bye now. Hey guys, I'm back again. Merrill Strachan here. All right. I hope you liked that last episode. I hope you found value in it. And if you did, please like and subscribe to our channel. We'd really appreciate that. All right. Also, remember, as real estate investors, we are all one deal away from something. We're one deal away from retiring from our 9-to-5 job. We're one deal away from making a tremendous impact in our community. We are one deal away from realizing our personal purpose. We are one deal away from securing financial freedom for ourselves and our family. We are all one deal away from something, and TN3B Financial is here to help you get that one deal. All right, like and subscribe. We'll talk to you soon. Bye now.